Hi, I'm Mehdi and welcome to Your Finance TV's Crypto Revolution. And we're covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. Adam, welcome back.
Hey, Mehdi, good to be back. You know what's funny, Mehdi, talking to you already today? You always see people post on Twitter, Bitcoin fixes this, Bitcoin fixes that, right? You know what we found out it doesn't fix? Allergies.
I
Bitcoin
no
doesn't
kidding.
fix allergies.
Well, I'm sure there'll be a coin that will come out for that Zyrtec coin, Zircoin. Oh my God,
Zircoin.
the
There we go.
Zircoin will
There we
fix
go.
our allergies.
I know the allergy coin. I love it. Nothing to sneeze at.
Oh, boom. Before we kick into all of our hot topics this week, Adam, don't forget to like and subscribe if you want to stay on top of our content. Otherwise, you won't hear us talking about everything to do with the crypto revolution. Adam, it's been quite the week again, hasn't it? We've seen some ups and downs on a macro front on the price of Bitcoin and other crypto assets. I'll be honest with you, right? So as much as we're seeing this debt ceiling commentary everywhere and the concerns about what's going to happen if they're going to overstep the deadline and what the implications are of that. I personally, rightly or wrongly, I thought this might have actually bolstered some of the crypto revolution, but we've actually seen a little bit of drift lower.
Yeah, you're right. I would have expected that same sentiment we had right after banks started collapsing and people started buying Bitcoin and going, oh, now I understand why I need custody of my own assets. Now I understand why I need to own an asset that the government just can't print more of and devalue. You'd have thought with this, whatever debt ceiling crisis, whatever we want to call it, whatever the mainstream media name for it is, that we would have seen more of that idea of I need to get out of dollars. I need to get out of something, the treasury, something that theoretically now has more chance to default than probably ever in history and get into something that doesn't have that chance. But we actually, you're right, Mehdi, like we haven't seen it. It's funny. And today, I believe that the market is up. The last I checked, the market was up to start the morning on, expectation or possibility that the debt ceiling crisis will be averted. Bitcoin's down.
Yeah,
So go figure.
it's an odd one, but do you know what? Onto like more positive headlines. I don't know if you saw this headline this week. There was Tether came out reporting their Q1 profits. It was $1.5 billion, Adam. Tether
Yeah.
banged out $1.5 billion or just shy in Q1 profit. You know what? That's more than Blackrock did in the same period. So I'm just saying, we have all these naysayers on the crypto universe. They're saying, well, it's just a couple of $1 trillion in the grand scheme of things. But you throw around Tether, $1.5 billion Q1, and you got BlackRock, similar
Yeah.
numbers. That's a surprising kind of turn of events, in my opinion.
Yeah, it's a little bit surprising until we remember how this actually happened, right? Tether did it because they take in all these assets, they take in essentially dollars, and then they go invest them, and they create a USDT or a US dollar Tether coin or Tether coin for every dollar, and then they can invest those in securities or I guess in kind of debt instruments like treasuries and such, which are paying more than they have in the last 15 years. Right. So they're investing in cash like securities, but earning interest, whereas they're not expecting to pay out interest to whoever gave them the money. It's I give them $1, they give me a tether, and then they can go make 3, 4, 5% on that. And with interest rates moving higher, this is how they're able to make all this profit. The more interesting part, Mehdi, or the equally interesting part is they've said they've invested some of that money into Bitcoin. They've invested some into gold, and they say they're going to invest as much as 15% now in Bitcoin.
It's fantastic. And do you know what the funny part is? It sounds like their risk management is actually superseding that of some of these regional banks. So, they seem to be managing their deposits in a far more efficient manner.
They really are. They're definitely superseding the federal government.
Well, I don't want to comment on that because they might listen
Yeah.
to this and shut us down or something. I don't know. But let's have a look at a non-speculative application for Bitcoin, the traditional inflation hedge, or as everyone talks about, or many people talk about. We've seen a lot happening in Argentina and Turkey. There's been a lot of hoo-ha about, political side of the elections in Turkey, the crazy levels of inflation in Argentina. But we've seen the ownership of digital currencies in Turkey was the highest in the world at 27.1%, followed quite closely by Argentina at 23.5%. This is well above the global crypto ownership rate, estimated at about 11.9%. This data is from a research firm, GWI. What do you think about this? Are we, this is a good use case of what we've seen for, Bitcoin.
Well, and what you have to see, Mehdi, is a lot of them are not using Bitcoin. They're actually using stable coins that represent a dollar. So remember, those in Argentina and the Turks and the Argentines, they're not really allowed to hold dollars. They can't take that many dollars out of the bank. They're limited on how many US dollars they can take out. Their own currency is being devalued in a ridiculous way. In Argentina, it's pretty much that's the business model of the government. In Argentina, they've been using DAI and USDC, US dollar coin, for quite a while. There have been more and more people utilizing that. Some people just decide to get paid in DAI. And Argentina actually has a pretty high number of crypto developers that choose to get paid in stable coins because that it makes it easier for them to manage their life. When they need to pay a bill or something, they just convert their stable coin into Argentine pesos and go ahead and pay what they need to. But their USDC or their DAI is holding more value. In Turkey, of course, we've seen these elections that they've recently had, and they're going to have, I believe, a runoff election. Both sides of the government are going to have some massive change, some potential changes to the monetary system, to the monetary supply. They've had issues in Turkey for a while with the banking system, and they actually use Tether more than they use USDC or DAI. So we just talked about Tether. In Turkey and in the Middle East, it's more USDT. In South America, it's more DAI and USDC. But they're utilizing something like stablecoins for exactly what they can be used for, which is not just payments, but they're using it as a store of value. So they're not going to Bitcoin and going, this is theoretically a store of value because there's only 21 million of them. They're going, no, this is pegged to the dollar. We know dollars. We don't care that the US government is issuing a whole bunch of trillions more dollars because our government is devaluing our currency by 100% a year.
It makes sense. It's a different way of creating some stability in their environment, and you kind of know that, okay, fine, we might see a 2-3% drop in the valuation of the dollar, but that's nothing compared to the 100+% that we're seeing on the Argentinian peso. So absolutely makes sense.
Yeah, exactly, and it's exactly what this technology should be used for.
Well, it's globalizing everything. And we'll get to another globalizing point later on in the show. So stay tuned. Let's have a little look at some of our regulatory conversations. Not too much of real substance this week. The Coinbase CEO is still obviously gunning for the SEC and Gary Gensler. He was looking to relocate the US headquarters, but it doesn't look like he's going to do that anytime soon. They are certainly increasing their presence in the UK and Europe, who have been much more friendly from a regulatory perspective, in their opinion. And they're now looking to visit the UAE and Dubai, which we also know are quite crypto friendly. These guys have really, I might have a biased lens, but these guys have tried to work with regulators in most ways possible. I feel like they've kind of been at the forefront of, okay, let's do this from a institutional perspective on how we can work with regulators, how we can do things in the most structured way, which will fit with what we likely see the outcome of regulators with these different assets. And it doesn't feel like they're getting anywhere with the regulators. And it doesn't feel like we're necessarily going to see anything happen going into an election cycle. Is there any silver lining in any of this, Adam?
In regard to Coinbase, look, they're fighting the fight. They're fighting the SEC. They I think filed something to request that a judge force the SEC to respond to some of their issues, force the SEC to actually issue regulation. The SEC basically came back this week and said, no, we don't feel we have to. We're not going to listen to that judge. We're going to do whatever we want. Keep in mind also that this, going back to what the SEC is doing this week was, I believe Monday or last week actually, was the deadline for comments regarding their new proposed custody rule, which affects me and other financial advisors. And I know that this is going to get to your question, Mehdi, I promise. But what we're seeing is this is a time when the organizations, the individuals, the companies that produce comments towards the SEC were ranging all the way from obviously crypto companies to the likes of JP Morgan. And I saw someone on Twitter said, it takes a special kind of person to draw the ire of both JP Morgan and the crypto industry at the same time. And that's what Gary Gensler and the SEC have done. They've done it with Coinbase too. And Coinbase is trying to play nice with regulators. They're not trying to find ways, inventive ways to find yield. They're trying to find ways for people to safely be able to invest in crypto, get on those rails and do so in a way that is regulatory compliant. But they have to know what those regulations are in order to be compliant. And that's the big deal. And that's why we're seeing them move over, go over and open in the UK, where there are now regulations, and in Europe, where there are now regulations, in Dubai, where they can work with the regulators. There was a picture last week of Brian Armstrong, along with, I forget who it was. I think it was like the finance minister in Dubai or something, basically talking to them. Here's what we want to do. We want to do it safely and securely. We want to keep people from losing their money. We're not trying to give people cute ways to make yield. We're trying to do it within the confines of regulation. Let us do that. And look, eventually, as we just talked about how worldwide ubiquitous crypto is going to be, the US is going to have to play along. They're just going to have to figure out a way to do it.
Now, on that theme, obviously the UK's kind of been putting some structure, and their regulators have been giving structure towards the crypto industry. Binance also came out, I believe they're the largest exchange, and they've been chiming in on thoughts around the UK regulation, potentially using them almost as a barometer for how the US should be looking at things and other regulators. And, does that make sense to you? Do you think that the structure that the UK's kind of put in place could be a template for the US?
I definitely think there's going to be some aspects of it. They're going to be template for the U.S. Of course, the U.S. doesn't really like to, I don't think, take advice from anybody. I think we know everything. But we get to see what it looks like, right? It's almost like our lab. We get to go see how it works. We get to go see what happens, what suits there are, what tokens get to be issued, what is going to happen on exchanges that are going to be regulated like Coinbase, and go, let's take aspects of those that work. Let's get rid of the aspects that don't, and let's put that into our own regulations and our own system. Hopefully, our lawmakers do that. Hopefully, our regulators will do that. We will see all the different pieces that are working in the UK and in the EU and in Dubai and in Singapore and in Hong Kong and everywhere else that there are regulations, that there are a pretty high number of crypto users. And then we'll get to make the regulation that hopefully will be, some of the best in the world, because we're taking our time. I say we're taking our time. We're taking our time because our regulators and lawmakers can't agree. We're not taking our time because we're, being very thoughtful about the process.
I was about to say, it's not necessarily because of thoughtfulness on the process, but we'll see. It's, again, obviously it's a topic we have to discuss on a regular basis to try and stay on top of it, but it doesn't feel like week to week we're seeing much happen. There's no traction, but stay tuned, and we'll keep you abreast of any changes that happen on the US regulatory system. Let's have a look at some applications, and keeping things with the US government bodies. The Secret Service has come out and said that blockchain technology is amazing at tracking money. They're seeing the real world application for the government to be able to track transactions and really be on top of things. We have talked about this week in, week out, and how this would make life easier for government bodies like the IRS and all these different groups. You can track everything. Embrace the technology. It seems like the Secret Service might be the leading charge on this.
They might very well be. And the interesting part, Mehdi, is the Secret Service actually did an entire Ask Me Anything on Reddit specifically about this topic. They did a 2-hour AMA on Reddit about this topic. They told everyone, here's how we use blockchain technology to track assets, to track financial crimes. It's super interesting to see how people move money from wallet to wallet to wallet, but we can watch it all. And when you hear the likes of Brad Sherman and Elizabeth Warren talk about how this is only used for criminals, the Secret Service is plainly saying, go ahead, criminals, we're going to catch you. There's a super good chance we're going to catch you if you are using blockchain technology. I've told you, Mehdi, any criminal who's using crypto, who's actually using Bitcoin for ransomware or something like that, is a very poor criminal. because we're going to be able to catch you. The Secret Service, companies like Chainalysis, we can watch the hop of every single wallet. And unless you're going to live your life, utilizing Bitcoin and live completely off the grid or something, which is not possible if you're going to live your life using Bitcoin, you're going to get caught. The other interesting part of an article that you and I both read, Mehdi, is the Secret Service, for incoming Secret Service agents, the Bitcoin white paper is required reading. Every one of them has to read the Bitcoin white paper to come in and be a part of the Secret Service. That's remarkably interesting that it's that important for the organization that's in charge of making sure that we don't have counterfeit money, of keeping the actual dollars safe.
Wouldn't you love to know how many members of Congress have read the Bitcoin white paper when they're trying to actually put together some sort of thought process around regulation for something like this? I'm going to think it's not a very high number.
It would be awfully nice for the Secret Service to do an AMA for Congress.
We should suggest that on that Reddit channel. Yeah. Our friend Sam Altman, he's been in the news, obviously, with all things AI. He introduced World App or Worldcoin a while ago. This is like World App, I guess the version 2.0 or 1.1 or however we want to kind of classify it, without the coin, if I'm understanding it correctly. And it feels more like starting from being a global ID verification with all that's happening in the AI world as well, as kind of tying the two worlds together. The whole concept is quite amazing from a big picture perspective. We're certainly raising lots of money. I think it's raised something like 100 million today. What do you think? This feels like all this global verification feels quite cool, right? If we're going in the right direction on globalizing everything, this does feel like a great step in that direction. You could do your iris and stuff in that ball and whatever at some point, the orb and
I think the worry here, Mehdi, is who has access to the data, right? Who has access to the information? Well, of course, Sam does. AI, OpenAI might or might not have access to it. So this feels very much like Minority Report, right? Like you're just going to scan your eye and they're going to know everything about you. You're going to be tracked everywhere you go. This has all sorts of, the I don't know, thoughts of dystopian future that we've seen in sci-fi movies. And I think a lot of people in crypto are highly against something like Worldcoin because the idea is you're going to get one ID. Now, a lot of us in crypto talk about on-chain IDs and stuff and being able to track, but to my knowledge, there's very little in the idea of Worldcoin or the orb or whatever that says, here's how we're going to use zero knowledge proofs or something to protect your information. It's literally, you're going to create an ID and it's going to be your ID forever. Just like you have a social security number if you're here in the US and that pretty much tracks you. Although we're getting to the point where your phone number tracks you, is what you use to track yourself everywhere. Now it's going to be your eyeball. That everyone in the world is going to know everything about you. And those of us, especially in the US, I'm a little skeptical of that. Now, if you live in a country, and this is kind of the tech that brought me to blockchain, some of the ideas that brought me to blockchain, right? If you live in a country where you're born somewhere and there's no official birth certificates because where you are in that country, there's no certifying body to come to your mom's house and go, yep, you had a boy. Congratulations. Here's the boy's name. We're going to register it with the state. And therefore you get a passport and all those things. This is a step in that direction, right? Of maybe now I can travel if I've never had an official birth certificate or I've never been able to get a passport because of that. Now maybe I can travel and see the world. Now maybe I can get something that looks kind of like a bank account. And we might be going in that direction. But based on what Sam Altman has already done with OpenAI, where he's basically, turned all this knowledge into this computer that's going to turn around and eat us all. And now you're going to do that and have people's information like their retinal scans. Like that's a little frightening to me.
Well, the downside is I like your use case for those smaller areas where the probably less affluent areas, certainly where there's no money, there's no technology or anything to do any of these things. But unfortunately, for them to register, the nearest orb to them would be about 4,500 miles away, and they can't travel there to register their eyeballs. So it might not necessarily work in the short term.
That's true. Yes, they have to go register their eyeballs.
Well, we'll see what happens and where Sam takes all of this next. But I'm sure Elon Musk will get involved as well somewhere, and we'll see what their thoughts are putting those two brains together. Adam, mass adoption. I feel like this is kind of the topic that everyone loves to talk about, and this has been one of the main concerns around all of these topics, right? How do we get mass adoption of crypto and into the mainstream adoption of transacting with these things in a minimal, the easiest way possible, right? And I think what a wonderful way to end our show. Let's talk about Visa on Base. Visa's definitely stepping up its game. Let's talk about Base and how you see this integrating into day-to-day society with in this application.
Right. So the Base is a layer two that Coinbase launched. And it gives the ability of different programmers to build applications on top of this layer two. So if we go back a little bit, Mehdi, what are the problems with blockchain? Why can we not buy the proverbial cup of coffee, which so many people say, okay, this technology has been around for so long and I still can't pay for things with it. I still can't go buy coffee or buy groceries or anything like that with, utilizing crypto, utilizing my crypto wallet. And some of the reasons why we didn't have that is one, first, we had Bitcoin and ETH, right? There were volatile assets. Well, I'm not going to pay for my coffee with a volatile asset, right? Because that means I could lose a tremendous amount of value in what I'm holding today through no fault of my own. So then we went on to stable coins, and you and I talked about stable coins and how they're being used in Argentina and Turkey earlier. And more people in the world want to use something that for right now looks and feels like a dollar. In the future, we might have crypto stable coins that don't, that kind of work the way the Treasury Department is supposed to work and say, here should be the value, but maybe there's a stable coin that isn't worth $1, but it's one, whatever it is, that's the value of, all these basket of goods worldwide. Okay, so we went from a cryptocurrency to a stable coin that can be transacted on these rails. And then we said it's too slow and expensive to do that, right? And you have to utilize this wallet technology. It's too slow and expensive. So now we have layer twos on top of Ethereum that bring the cost down, that make the speed much higher. And then we have something, Mehdi, that in the Ethereum world is called account abstraction. It basically means if I want to buy that cup of coffee, I don't have to pay the gas fee anymore. The vendor, the coffee shop can actually have a whole bunch of gas. In the Ethereum world, that's what you use to actually pay for the transaction. They can have that and pay that for me. I can pay for my coffee. The benefit here is it's going to be fast. I can pay for it with something that looks like a dollar. It can be out of my crypto wallet. The coffee shop is going to get their stable coin immediately. It's immediate settlement. And it's going to happen instantaneously. It's going to happen, for virtually no cost. The coffee shop's going to get to pay for it. And it's going to be cheaper than accepting Visa, cheaper than accepting MasterCard or American Express or anything like that for the coffee shop, the whatever retailer, whoever is utilizing it. So we are getting there. We're stepping through, we're going through these steps to go, how do we solve for A? How do we solve for B? How do we solve for C? How do we solve for D? And we're getting there to the point that eventually, just like you and I might use Apple Pay to pay for something right now, I'm just going to be able to use a QR code, scan it, and USDC or DAI or something is going to go from my wallet on my phone to the wallet of the coffee shop instantaneously.
Fantastic. What a way to wrap up the show on a nice positive use case for all this crypto conversation, this crypto revolution that we're in, Adam.
Yep. I love the positive use cases, and it comes full circle, right? You have people in Argentina and Turkey who are going to be able to use USDC to pay for things, and it's going to be on something built by Coinbase, which again is the one that we talked about, is trying to be regulatory compliant everywhere. So we're going to feel comfortable using a chain that was built by Coinbase with all these applications built on top of it. And it seems like we're heading in that correct direction.
Fantastic. Adam, as always, thank you so much for your time and talking crypto with us.
Happy to be here, Mehdi. Love talking about it.
And as always, I want to urge our viewers to check out Adam's course on digital assets and crypto education. The links are down there, interaccess.io. And don't forget to subscribe to your Finance TV. Get it done. We'll be back next week with more about crypto revolution. Until next time, good luck investing.